I used to believe that I know something about taxes because I led the campaign, for flat tax in Bulgaria for 10 years. But when I started preparing for today, I realized that Roald Coase was absolutely right when he said that if you torture a database long enough, it will confess. So, and this is absolutely true for the entire argument about G7, whatever new international corporate tax, about the entire database of OECD, about the recent argument of my compatriot Kristalina Georgieva to increase taxes, with this IMF. So, and if you look at the justification, there is nothing more than what has been pointed at by Roald Coase about 90 years ago. Several things which I would like to. What is this? We have okay. So I have written something, and this is the content. So the so-called inequality inclusive growth is no justification for progressive taxation. The more progressive, the less. It's proven by the database, actually. But, flat taxes were given up by many countries, probably 18 already, not because of the flat taxes themselves, but because of compromising the principles Scott was talking about. These are very visible in Russia, this is very visible in Slovakia, but any other countries as well. So if you go back to history, I reviewed Mill, Cohen-Stewart, and Knut Wicksell. So the illusions were coming in tax analysis were coming more from Cohen-Stewart rather than Mill and Wicksell. Tax reforms of the 19th century are also in there as some sort of lessons, and these are tax reforms in Britain, Sweden, United States, G7, and some of the OECD countries. And then I will switch now to flat tax reforms in Eastern Europe, especially Bulgaria, and some of the lessons from those tax reforms. So we had 7 points plan. Number one was simplicity. Number two was include elements of voluntary compliance. 10% justification. It was probably the most important part. We did not invent this 10%. We did a survey of the actual tax paid for a period of 15 years, and it happened that that tax paid, actually paid, was on corporate and personal income levels, segments, was between 12 and 13%. But more importantly, we decided to check the costs of tax avoidance. And we did a very simple exercise. We went to tax advisors, and you name a figure you would like to save as taxes, for example, 10,000. So what was the price, for the tax advisors? It was 10%. So we decided that this is enough evidence, to start with this. The campaign was not easy. It started together with Poland, Slovakia. In Poland, it was backed by Balcerowicz, but then he resigned, so the Polish reform, was basically into nowhere. In Slovakia, they succeeded before us because they created a union of taxpayers, and they defended the flat tax. When I announced that we are setting a union of taxpayers in Bulgaria, suddenly the tax advisors of the finance minister established 3 such organizations. So what we did then was to invent another method of convincing the public and the government. And what we did, and we are still doing this since 2003, every year we compile an alternative to the government budget at the assumption of flat tax 10% on personal income and corporate income. No compromises to social welfare, to have the politicians, with a room to maneuver. And balanced budget. Never nothing else but balanced budget. So we did this for about 7 years, and on the 7th year, the government actually adopted the 7 points plan. Not fully, of course. But we still continue this exercise because every year there is some member of parliament or some political party which is basically advocating, to go back from the flat tax. And one of the key things, for the Bulgarian tax is very similar to Estonia. One of the key things is that we do not have a non-taxable income. It's very important. So you may earn €1 and you pay 10 cents. You may earn 1 million and you pay 10%. So this is very important. So the results. The disposable income index had grown by 130% since 2007. The share of, and these are all EU countries with flat taxes. This is Estonia, Hungary, Bulgaria, and Romania. What we have as a pattern is that the labor share in GDP has been constantly rising, in the last 15 years since the introduction of flat taxes. Hungary's situation is not that visible because Hungary was very late. There are several other outcomes which are very important, and most of it is related to Bulgaria. On the individual and household level, what we have, according to the surveys of Credit Suisse annual wealth reports, what we have in Bulgaria since 2000 to 2020, the wealth, if you remember, the wealth is measured by Credit Suisse like the value of the assets owned by adult citizens of a country. The wealth of the Bulgarian citizens had grown up by 11 times. There is no other country in the Northern Hemisphere with that result. And the upper trend came, with the introduction, with the reduction and simplification of the taxes since 2000 until 2007. And then it was boosted by the introduction of flat tax first on corporate income in 2007 and in personal income in 2008. Another thing which is very important for Bulgaria, because we came with the reform after a hyperinflation period. Bulgaria was running the charts of hyperinflation in 96 and 97. It was very similar, like, for example, Venezuela today. In April 96, the average salary was about $100. In December 96, the average salary was $40 a month. The average pension was $20 a month. In February 97, the average pension was $5 a month, and the average salary in industries was $20 a month. So this led to evaporation of the savings. So in those times, the savings went down from 54% of GDP to 6% of GDP. Since then, we have savings, personal savings and company savings, going up to 70% of GDP. The entire banking system is fully backed up by deposits. Another thing which is very important as a result, propensity to consume since 2008 to present day had risen by 20%, from 60% of GDP to 80% of GDP. And last but not least, the tax wages in Bulgaria are much less sharp than in the countries with progressive taxation. And this is a pattern for all the countries with flat taxes. But there are also some macroeconomic or general outcomes. One of those is that Bulgarian revenue service is as good as that of Denmark, or Sweden, or Germany. What is also important is that the fiscal reserves of the government since 2008 has been always absolutely comfortable. They have been able to meet all the external shocks, be this the slowdown of 2008, 2009, be this a couple of very complicated cases, arbitration cases, lost to Russian state-owned companies. Bulgaria paid a lot, to Russian state-owned companies. Or it is a run on the fourth major bank in the country, which costed 4% of GDP in 2014, but the fiscal reserves were absolutely sufficient to handle this according to the rules of the European Union, basically compensating, for smaller deposit holders. Several general results, not so much about Bulgaria, but for everybody else. There is no clear causality effect between taxes and eventually wealth. But it is clear that the simpler the taxation, the lower the taxation, the growth is more likely than anything else. Bulgaria, of course, benefited, and this 11 times, growth of wealth is because of the low base in the beginning, not so much. But actually, what is important also, none of the richer countries tried flat taxes. So currently, as we know from Scott's organization, there are 5 states of the United States which are planning to apply flat taxes in the years to come, probably 2004, 2005. It depends, of course, on many things. The countries which had given up the flat tax systems had done so because of one very simple reason. They were not flat. So they had typically several rates. For example, Slovakia, they had 2 rates, a non-taxable income, then a taxable income above some threshold, and they have highly progressive and changeable every year social contributions or labor taxes. Another thing which is very important as a result is that the flat tax jurisdictions of the European Union spent actually more on social welfare than the progressive taxation. This is also, a recent report, one of your colleagues and the Institute Molinari in Brussels. They did this survey last year. So, last but not least, when you try to compare lessons or to derive lessons, for other countries, what is important is that we have a very strange situation in which only the countries which were poorer for some reason just before, if we talk about the members of the European Union, just before entering the European Union, they tried flattering their systems. None of the richer countries had tried to do so. And here I'm finishing. And here we have 2 very important things. So the flat tax, as we experienced it in about 21 ex-communist countries, is no substitute for better institutions, which basically means, however, that the countries with better institutions can do better. Thank you.
Thank you, Professor.